Every 4 years, as there's another election in the United States, there's endless debate about which candidate is better. And the world is distracted, and billions of dollars are spent, and countless hours are wasted debating what, at the end of the day, really doesn't matter. Because if you look in recent decades at US politics, whether or not the president is a Republican or a Democrat, their foreign policy is basically always the same, and much of their economic policy is basically the same. There are some differences on cultural issues, but 95% of their policies remain the same. And if you don't believe me, well, you should listen to a very frank admission by one of the world's most powerful people, Larry Fink, who is the billionaire CEO of the world's largest investment company, BlackRock. Larry Fink was speaking at a conference organized by the financial industry in October, and in his speech, he said that it doesn't really matter who the US president is because Wall Street is going to continue to benefit, and billionaire capitalist oligarchs like him are going to continue to get richer and richer. This is what the billionaire BlackRock CEO said, quote, "I'm tired of hearing this is the biggest election in your lifetime. The reality is over time, it does not matter." And the Financial Times noted that BlackRock has $11.5 trillion in assets under management. I repeat, 11.5 trillion with a T. That makes it the world's largest investment company. And Larry Fink said at this financial industry conference, quote, "We work with both administrations and are having conversations with both candidates." So this is from the mouth of one of the most powerful oligarchs on Wall Street, the CEO of BlackRock. They are working with both Republicans and Democrats, Donald Trump and Kamala Harris and Joe Biden. There are really no differences when it comes to Wall Street. And I really need to emphasize how powerful these giant asset managers on Wall Street are, like BlackRock. In fact, BlackRock is part of what's known as the Big Three asset managers, which are BlackRock, Vanguard, and State Street. Together, these three Wall Street asset managers are the largest owner in 438 of the 500 most important American corporations on the S&P 500. This represents 88% of the 500 largest companies in the United States, and together they make up 82% of the entire market capitalization of the S&P 500 index. And if you look at the S&P 500, which is the index of the 500 biggest US companies listed on stock exchanges, you can see why BlackRock is saying the president doesn't really matter. Because in the past 3 decades, the S&P 500 has gone up by over 665%, and especially since the 2008 financial crisis, it's gone from around 756 to 5,728. And it's even clearer if you look at the Nasdaq Composite Index, which is more heavily weighted toward big tech companies in the US. And you can see that in the past 3 decades, the Nasdaq has increased by 7,254%. In 1990, the Nasdaq index was around 436. As of 2024, it's now at over 18,000. And if you look at these charts, you can see that it doesn't really matter who the US president is, especially since the 2008 financial crisis, which was caused by Wall Street. There has been a massive bubble inflated in the US stock market. And it doesn't matter whether the president was Barack Obama, a Democrat, or Donald Trump, a Republican, or now Joe Biden. The US government has intentionally continued to inflate this bubble. And why is that? Because US politicians from both parties are funded by big billionaire capitalist oligarchs and huge corporations. These are the largest contributors in campaign finance, and essentially, US elections can be bought and sold by the oligarchy. And as of 2023, the wealthiest 10% of Americans own 93% of stocks. Business Insider noted that this is the highest level ever recorded, 93% of stocks held by just 10% of Americans. Meanwhile, the bottom 50% of Americans, the bottom half of the population, hold just 1% of all stocks. 1% held by 50%, 93% held by 10%. It really must be emphasized that the United States is not a democracy. It is an oligarchy controlled by rich capitalist elites. This was the conclusion of a famous study done by academics at Princeton University and Northwestern University. They tried to do an empirical analysis to see what impact, if any, average people have on policymaking in the United States. And in a famous study in 2014, they concluded, quote, multivariate analysis indicates that economic elites and organized groups representing business interests have substantial independent impacts on U.S. government policy, while average citizens and mass-based interest groups have little or no independent influence. End quote. They said that this provides substantial empirical support for theories of economic elite domination and not theories of majoritarian electoral democracy. In other words, as British state media, the BBC, put it, an academic study shows the US is not a democracy. It is an oligarchy. This is especially clear when you look at the insane amounts of money that are spent on US elections and how, especially in recent years, the number spent on US elections has skyrocketed. These figures are adjusted for inflation, by the way. In the 2024 elections, not only for president, but also for Congress, roughly $16 billion were spent funding the races of different candidates. In the 2020 elections for both president and Congress, it was more than $18 billion. In the 2016 elections, it was more than $8 billion. So in the past decade, the amount of money spent on US elections has more than doubled. But still, in past elections, we're talking about $8.6 billion spent in 2012, $7.6 billion spent in 2008, $6.9 billion spent in 2004, $5.6 billion in 2000. This is the cost of buying an election. And why do big corporations and oligarchs spend so much money? They're not wasting it. It's an investment because it's actually quite easy to buy an election in the US because, again, the US is not a democracy. Look at the results in the past 2 decades. More than 90% of candidates running for the House of Representatives who have more funding win the election. And more than 80% of candidates running for Senate who have more funding win the election. So in other words, the US is the best so-called democracy that money can buy. And of course, the infamous 2010 Supreme Court ruling, Citizens United versus the FEC, opened the floodgates and said that there is no limit that can be placed on corporations in the amount of money that they spend in an election. So, quite literally, US elections can be bought and sold. A hilarious example of this is looking at the crypto industry, which has been flooding the US elections with campaign contributions. Now, first of all, I should point out that the crypto industry is seen as decentralized, and some people even claim that they're fighting Wall Street, which is hilariously naive. It's nonsense. In reality, Wall Street has invested very heavily in crypto, and BlackRock now has the world's largest Bitcoin fund. It has a $20 billion Bitcoin ETF. And the Washington Post published a very interesting article that is titled "Crypto Cash is Flooding the 2024 Election." The article notes that the cryptocurrency industry has spent more than $134 million trying to elect dozens of allies to Congress from both the Republican and the Democratic parties. And the organization behind this is called Fair Shake. And then there are multiple super PACs. And they have bought ads for 67 different candidates. And the funny thing is, None of the ads that they have bought actually mention crypto as an issue, but they're trying to get certain candidates elected from both parties who will not regulate the crypto industry. As the Washington Post notes, they hope to fill the halls of Congress with lawmakers who can help ward off stringent federal rules to prevent regulation of the industry. This would be illegal in most countries because this is bribery, but it's completely legal in the US. Now, the Republican super PAC backed by the crypto industry is called Defend American Jobs, and the Democrat super PAC backed by the crypto industry is called Protect Progress. The Washington Post included a very interesting graphic with a list of some of the different congressional candidates who are funded by the crypto industry, and they include many Republicans and Democrats. But this just shows how the US is an oligarchy, not a democracy. And it reminds me of an infamous quote from Joe Biden back when he was campaigning for president in 2019. Biden was speaking to a group of rich donors at a fundraiser in New York, and he famously pledged that, quote, "No one's standard of living will change. Nothing would fundamentally change," end quote, if he won the election. He also promised he wouldn't demonize rich oligarchs because, of course, they were funding his campaign. So this should be the official slogan of US politics during US elections. Quote, "Nothing would fundamentally change." That's it. Joe Biden said it, and it's true if Kamala Harris wins, and it's true if Donald Trump wins. And this is exactly why Larry Fink, the billionaire oligarch CEO of BlackRock, the world's largest asset manager with $11.5 trillion in assets, said the quiet part loud and admitted that it really doesn't matter who wins the US election because Wall Street will be the true winner. And if you visualize wealth inequality in the United States, you can see how cartoonish the inequality is. The bottom 50% of households are almost not visible on the chart. In fact, in 2011, just 3 years after the financial crisis that was started by Wall Street, the share of wealth owned by the bottom 50% of households in the US reached its low point of 0.4%. Meanwhile, in the past few decades, the wealth of not just the top 1% has skyrocketed, but the wealth of the top 0.1% has broken records. According to data from the US Central Bank, the Federal Reserve, the top 10% own 2/3 of total household wealth. The top 0.1% owns 14% of household wealth. The top 1% owns more than 30% of household wealth. And the top 10% owns 67% of household wealth. That, of course, means that the bottom 90% only owns about 33% of household wealth. And the bottom 50%, the bottom half of the population, only owns 2.6% of total household wealth. So in other words, the top 50% of the US population owns 97.4% of total household wealth. And given that massive inequality, it's no surprise that 95% of all capital income goes to the top 50% of the US population. The bottom 50% gets just 5% of total capital income. And the richest 10% of Americans get around 60% of total capital income. And this is how you become rich in the US. You don't become rich by having high wages. You become rich by investing in assets, in financial assets like stocks and bonds, or in real estate, and then you get the majority of your income from capital, not from actually working. And the vast majority, again, 95% of that income from capital goes to the top 50%, whereas the bottom 50% of the population has to actually work in order to get wages. But even then, more and more of income is going to the top 1%. And this is true in many Western countries and Japan, not just the United States, although the US is even worse than its allies in Europe and the other countries in the G7. In 1975, about 7% of income was earned by the top 1%. And by 2015, that figure was around 17 or 18%. And it has only continued to get worse since then. But it's not because US workers are lazy or they're not working hard. In fact, if you look at productivity, it has skyrocketed in recent decades, especially with more and more technology. And at the same time, US wages have been stagnant since the beginning of neoliberalism, of free market fundamentalism in the 1970s. There has been a divergence between worker productivity and worker compensation. And one of the big reasons for that is because of the financialization of the US economy in the neoliberal era of free market fundamentalism. If you look at data from the US government, you can see that compensation in the non-financial sector has been stagnant since the rise of neoliberalism under Ronald Reagan in the 1980s. And at the same time, the compensation in the financial sector has more than doubled in the past 40 years. And the only other time in modern US history where you saw this kind of divergence was, drumroll, during the Great Depression in the 1930s. And it was the progressive policies of FDR and the New Deal and the US government's very heavy regulation of the financial sector that closed that gap in compensation between the financial and non-financial sectors. So it's no surprise that in the neoliberal era, since Reagan and continuing under Bill Clinton, this is of course bipartisan, the deregulation of the US financial sector and Wall Street has led to this massive inequality. And this is why so many people in the United States are so angry and they feel that their lives are getting worse, not getting better, because their purchasing power has been falling. In the past 2 decades, the costs of living in the US have absolutely skyrocketed and wages have not caught up. Hospital services in the horrific privatized for-profit US healthcare industry have increased by more than 200% in the past 2 decades. College tuition and fees have increased by about 170%. Childcare has increased by over 100%. Food and housing have also skyrocketed. Now, there has been a significant decrease in the cost of consumer goods. And why is that? Because much of this was created in China, and that led to deflation in consumer prices. So despite the fact that wages have been stagnant in the US and the West overall for decades since the rise of neoliberalism, people were still able to buy more consumer goods and technologies because China could produce them so much more cheaply. But then actual living expenses and services have gone through the roof in the US. And again, a big reason for that is because of the financialization of the economy and because so many of these services, these companies have been bought up by Wall Street, by private equity funds that have been buying up hospitals, buying up nursing homes, buying up child cares, and of course, buying up housing and then ratcheting up the costs and charging people higher and higher monopoly rents. This is especially clear if you look at the price of housing in the US. It's perfectly logical that people feel that they can't afford a house because it's true. If you look at an index of wages and how they've increased over the past few decades, and then you look at housing prices, there was a big divergence in the lead up to the 2008 financial crisis. That was the housing bubble that caused the financial crisis largely. And then after the 2008 financial crisis, that bubble fell, and briefly around 2012, the price of housing was back at level with wages. But since then, in the past 13 years or so, there has been another huge bubble that is even larger than the bubble before the 2008 crash. And this is why the rent is so damn high. This is why people, average working people, feel that they cannot afford housing, because they cannot afford housing, because housing has become a speculative asset that is used by the rich And there are huge numbers of housing units in the US and other Western countries that are empty. Rich people buy up these housing units and then they invest in them. They don't actually live in them, and they expect that over time, the value of those housing units will increase and they'll become richer, and then they can maybe sell one in the future. Or, of course, they can rent them out to people and charge working people a huge part of their wages. This is exactly what's happened in the past several decades with the rise of neoliberalism. 45% of households in the US spend more than 30% of all family income just paying rent. Nearly 1/3 of US households spend more than 40% of family income on rent. And close to 1/4 of US households spend more than half of their family income just paying rent. And increasingly, they're not paying that rent to an actual physical landlord. They're paying that rent to a Wall Street asset manager. Because you know who is the largest landlord in the US? It's Blackstone, the asset manager and private equity fund. Blackstone owns and manages more than 300,000 units of rental housing in the US, making it the largest landlord in the country. And in just 2 years, from 2021 to 2023, it added 200,000 housing units to its portfolio, buying up single-family homes and multifamily rental properties. At the same time, Blackstone initiated a wave of evictions, which has made the homelessness crisis even worse. And Blackstone has spent millions of dollars lobbying against rent control in states like California, opposing attempts by the government to implement rent control that would actually benefit average working people. This is how British newspaper The Guardian described Blackstone. Quote, "Blackstone is the largest commercial landlord in history. Over the past 2 decades, it has quietly taken control of apartment blocks, care homes, student housing, railway arches, film studios, offices, hotels, logistics warehouses, and data centers. Blackstone doesn't just own real estate, it owns everything," end quote. And in recent years, Blackstone has moved from commercial real estate into residential housing. And this turned Blackstone's billionaire oligarch CEO, Stephen Schwarzman, into the highest paid CEO in the US financial services sector in 2022, because he saw that they could make huge profits by buying up housing, becoming landlords, and then charging people monopoly rents. Because this is how you actually become a rich capitalist oligarch in a Western, financialized capitalist economy. You don't actually invest in a factory and create jobs and produce something tangible to help people. No. You go to Wall Street, you create an investment fund, you take rich people's money, and then you invest it in existing companies, existing businesses, which is Blackstone became well known as a private equity fund. You buy up existing companies, you sell them for parts, you bankrupt them. This is what they did to Red Lobster. This is what they did to Toys R Us. This is what they did to many other small businesses and veterinarian companies, doctors' offices and child care clinics and nursing homes. This is what they're doing. They buy them up. At the same time, they cut pensions. They sell off real estate that is owned by these companies, and then they rent that real estate that they previously owned, and they pay themselves very fat paychecks and bonuses, and they pay their investors huge dividends. Their rich capitalists and investors get richer and richer, and they are cannibalizing the economy. And meanwhile, they fund US politicians, because one of the biggest donors to Donald Trump's presidential campaign is, drumroll, Blackstone billionaire CEO Stephen Schwarzman. He is one of the largest donors to the Republican Party, and he also funded Donald Trump's previous presidential campaign in 2020. But to be fair, of course, it's not just Donald Trump. The Democrats are also backed by Wall Street, and CNN, which of course is very pro-Democrat, they boasted, quote, how Kamala Harris is winning over Wall Street. And they talked about how Kamala Harris has been continuously moving to the right, abandoning any pretense of supporting left-wing economic policy. She does not at all. She is supporting the same neoliberal economic policies as the Republicans and trying to win over Wall Street, and has had some success. But Wall Street is funding the campaigns of both Kamala Harris and Donald Trump, as the New York Post boasted, and the New York Post is a conservative media outlet that supports Trump, quote, "Top Wall Street CEOs cooling on Kamala Harris as Donald Trump's polling numbers surge," end quote. So basically, the presidential candidates are fighting over who can be a better puppet for the billionaire capitalist oligarchs on Wall Street. Now, in Trump's case, it's pretty easy to explain why so many billionaires on Wall Street are supporting him. It's because he cut their taxes when he was president previously, and he has pledged to continue cutting their taxes. A study in 2019 found that Trump's tax cuts helped billionaires pay less than the working class in the US. I'm reading here. Donald Trump's $1.5 trillion in tax cuts have helped billionaires pay a lower rate than the working class for the first time in history. In 2018, the richest 400 families in the US paid an average effective tax rate of 23%, whereas the bottom half of American households paid a rate of 24%. Meanwhile, in 1960, the 400 richest families paid 56% in taxes. That was in 1960. By 1980, it fell to 40%, and now under Trump, it was 23%, and he has continued pledging to cut them even further. And by the way, this is not even talking about wealth tax. There are very few significant wealth taxes in the US. This is mostly looking at income. And as I stressed earlier, rich people, actually super rich people, millionaires and billionaires, most of their wealth comes from investments, not actually from wages. And if Trump wins, taxes on the super rich are going to fall even further. A study by the Institute on Taxation and Economic Policy estimated, looking at Donald Trump's proposal, that if Trump wins, taxes will be cut very significantly for the richest 5% of the population. And they actually estimated that the bottom 95% of the population will have a tax increase under Trump. So this is the class war staring us in the face. The US government is waging a class war. But like I said earlier, I want to be fair. It's not just the Republicans and Trump. They're sometimes more blatant about it, but the Democrats do this as well. In fact, the Biden Treasury Department has been run by a bunch of top former executives of BlackRock. And if Kamala Harris wins the election, it's very likely that her economic policy will also be run by former executives of BlackRock. This is an article from Bloomberg noting, quote, BlackRock is rehiring Mike Pyle, a former senior aide to Kamala Harris and one-time executive at the firm, strengthening the close ties between the world's largest money manager and Washington. Pyle has been informally counseling Harris's presidential campaign on economics. So again, all of this is just showing how accurate this study co-authored by the Princeton scholar was when it found that the US is not a democracy. It is an oligarchy. It is not the people of the United States, and especially working people, who determine who the representatives are in government. It is certainly not them who determines what US government policy will be. It is big billionaire capitalist oligarchs and huge corporations and monopolies. They determine who will win US elections and what government policy will be. So honestly, I think we should spend much less time debating which candidate will be better and what they're going to do, and the Republicans versus the Democrats. I think that's a big distraction. And of course, the billionaire capitalist oligarchs on Wall Street continue to laugh to the bank. They're laughing as they're counting their billions of dollars in wealth as everyone's debating and arguing about which representative of the capitalist oligarchy will be better for them, when in reality, they always lose, and it's Wall Street that always wins every single US election. Of course, not just Wall Street. It's also the military-industrial complex. It's also Silicon Valley and big tech monopolies and intellectual property monopolies. They all benefit as well, of course. But the point is that the US is not a real democracy. It is an oligarchy, and we really need to be honest about that. On that note, I'm going to conclude. I'm Ben Norton, the editor-in-chief of Geopolitical Economy Report. I want to thank everyone for joining me today. Please like and subscribe. Please share this, and I will see you all next time.